Good morning, ladies and gentlemen. Please excuse me for the accent straight up, but welcome to the Master Investor Conference. This morning I'll be talking to you about Zenith Minerals, and in particular today's talk will focus on the metals that go into making batteries, and why you should see Zenith as a particularly good investment opportunity to gain exposure to those metals. So if we look at Zenith Minerals, it's listed on the Australian Stock Exchange. The corporate structure is very simple. We have 213 million ordinary shares listed. As of Friday, the share price was 20 cents. The market cap is a little over 40 million Australian dollars. Our shareholder base, we are a very tightly held stock. The top 40 shareholders own 71% of the company. 10% of the stock is held by the directors, and we are totally aligned with shareholders in increasing shareholder value to also increase our wealth. If we look at those top 40 shareholders, many of those come from a company that we were all involved with. That's the current board. We were all involved with a company called Duralia Resources, and I'll talk a little bit about the history of Duralia. And the other major key holder base is UK sophisticated investors. We've had some pretty good share price appreciation in the last 6 months, going from 10 cents to a close on Friday of 20 cents. So the board and management, we're predominantly geologists. We have a board of 4 who are all technically very strong in the geology, mining and exploration fields. We've all been involved with numerous mines and discoveries throughout our careers. But we've also had significant commercial success, and that's best demonstrated through the company, the Australian listed company, Duralia Resources. That company went from a 3-cent share price to a share price of over $5.50. From the period of 2003 to 2011. In addition, from that company, we spun out 7 additional companies onto the Australian stock market throughout the period of 2005 to 2009. I ran the first of those, this company called PacMag Metals, the PMH ticker code here. In itself, it was also taken out by a Canadian company for $50 million in 2007. And in addition, that company spun out a uranium deposit in North Wyoming, which is currently in production and run by a company called Peninsula Minerals. So, a history of technical and commercial success with this board. And I guess why this metal mix? So we've picked on lithium, cobalt and gold, and lithium and cobalt are the 2 key ingredients that goes into battery metals. I'll talk about that in detail shortly. And we also like having exposure in the portfolio to gold, as we see that as a hedge against instability. And we certainly think we're living in times that are generally less stable. If we look at electric vehicles, and I guess this is a key to the battery story at the moment. We've got a slide here, and I think it's a drone photo, and it pictures quite well Candy's electric vehicles in Jiangxi province in China, and really sort of gives that feel as to sort of how expansive these new electric vehicles are within China itself. So if we look at who is the largest manufacturer of electric vehicles, and it's a group called BYD. That company's 8% owned by Berkshire Hathaway, and that's the largest electric vehicle company and battery manufacturer as it stands at the moment. If we look at what else is happening in this space, so companies like Jaguar and Land Rover will have all new models from 2020 being fully electric or hybrid. And the Volvo will be a year later than that one. So it's government mandated change that's pushing this move into electric vehicles, and governments like the Scottish government said it would phase out the need for petrol vehicles and diesel cars by 2032. And the UK and French also have these sort of targets in place. In terms of another way of expressing this, that China has 440,000 charging poles in place already as of December 2017. And it's not just electric vehicles that batteries are included in. Atlas Copco, one of the world's biggest underground mining manufacturers of equipment, are looking at all going electric as well. KTM, a brand that's well known in Europe, now have an electric motocross cycle. And we've recently seen the world's largest lithium-ion battery switched on in South Australia. That's fed from a wind farm, and it will be used to iron out demand supply within the South Australian grid system. So that's a 250 megawatt lithium-ion battery supply there. So lithium batteries, it's just some basics. So we have a metallic cathode. So that metallic, the metals going into those are cobalt, nickel, manganese, iron, phosphate, and aluminium. We have the lithium ions in the middle, and so that's taking the charge between the metallic cathode and the graphite anode. So it's the metals in the cathode that actually give the battery its name. So a lithium cobalt battery is obviously named after the cobalt within the cathode. Lithium manganese oxide battery, similarly named, and hence these other names. What manufacturers are trying to do is really make sure that their batteries have a high specific energy, high specific power. They want good performance, low cost, a high lifespan, and they obviously want them to be safe. But there's trade-offs in this chemistry. So if we increase the nickel content of a battery, we can actually lower its cost. But there's a trade-off. There's only a certain amount of nickel you can put in a battery before you start to cause thermal instability. And we saw that with some of the Samsung phones catching fire and the like. So in terms of the economics and these metals that are going to battery, first of all, the lithium. So all of those batteries contain lithium, all the various types of batteries. And it goes from a relatively insignificant amount in your cell phones of, say, 12 grams, through to larger amounts in the electric vehicles, 144 kilos in something like an electric bus, to a large power storage unit similar to what we showed in South Australia may contain 100 tonnes of lithium. So it's this mix of use and potential use that's driving the lithium market, and why we've picked lithium and cobalt. So we can see that the various metal mixes here, and this is by weight of those metals that go into the various battery types. And you can see there's a bit of a mixed bag, but also nickel's focusing quite heavily in terms of weight. But if we look at the metal prices, so the cobalt price at the moment is sitting around $87,000 per tonne, and that sticks it up and makes these particular batteries here, the lithium and the cobalt being the dominant metals going in by value. And that's why we've picked those and focusing on those as our key exploration targets. I recently attended an iron ore conference in Western Australia, and they put up the slide on the left. Now this is reality. So from 1997 through to 2016, we saw a massive increase on iron ore imports into China. And that was government-mandated modernisation of China. And so 50 million to 1 billion tonnes. If we look at the lithium forecasts on the right-hand side, it's again going to be driven by the government changes. So China has said that it wants alternate fuel vehicles to be a fifth of their fleet by 2025. We've got additional targets in place with France, Norway, Germany, Netherlands and Britain. So whatever chart I put up on this side is going to be wrong, but if we can just take the general thematic of a massive increase required in lithium markets over the next decade or two. In terms of cobalt, particularly the supply. 65% of the world's cobalt comes out of the Democratic Republic of Congo. There's not many other alternate decent supplies throughout the world. The other supplies generally come as a byproduct out of nickel mines, and increasing the output from those mines is difficult without affecting the primary metal, which is the nickel story. So I don't want to say too much about the DRC, but I guess this one is probably a pretty clear statement that it ranked last in 2008, 2009 in places that you want to do business. So it ranked 181 out of 181 countries. I've personally been involved with an exploration play that was taken off us by the President in the DRC. I won't be putting any of our investors' money back in this country. I won't be putting mine back in this country. But that is the reason why cobalt prices are going through the roof at the moment, because the supply is heavily constrained. So our key projects from an exploration point of view, we've got this lovely mix of the cobalt and lithium. We've got gold as well, and we've got a resource of some copper zinc in Australia, in Queensland. So our projects are the lithium, predominantly in the US and Mexico, and our gold project is in Turkey. So first of all, an additional lithium project we have in Western Australia, Split Rocks. I want to point out to you the location of a new discovery here from a competitor, Kidman Resources. So this is a top 10 play of a pegmatite project. So the spodumene within that is the primary lithium mineral that gets mined and treated and processed to go into these batteries. We have a massive landholding here of 500 square kilometres. Our nearest neighbour to the north is Rio Tinto, who have just come into this particular area. We've started with a very clean slate. There's been no lithium exploration on our acreage to the north of this discovery. We started screening with geochemical surveys. We've only covered about 10% of the licences to date, but we've turned up three compelling targets for drilling. We've got crews in the field as we speak, and we'll be drilling these targets in the coming months. So we expect significant news flow coming out of this Split Rocks project. In addition, up in the northeast of this same tenement portfolio, we were hunting around for a good cobalt play, and lo and behold, we went through some historic data that was conducted primarily for nickel sulfide drilling. In the near surface, it has these flat-lying blanket of very rich cobalt associated with nickel mineralisation. It has what appears to be quite a low strip ratio of barren material above, and we have just completed a 70-hole drill program testing that target area over 4.5 kilometres of strike potential. The samples from that drill program are in at the laboratory, and we expect to see those later this month. We believe and hoping that will put us straight into a resource, and we'll be able to take this forward through to development on this particular asset in the very near future. In terms of the lithium assets, so these are in joint venture with Bradderhead Limited. So Bradderhead is one of Jim Mellon's companies. Jim gave us a refund of our costs in putting these assets together, and he's going to invest $5 million over the next 3 years to earn 55% equity in these projects. From that stage, we can actually elect to contribute. We've got a one-off point of election, or we can be free carried at 30% to the end of 2 pre-feasibility studies on 2 of those projects. So Bradderhead are looking to list on the AIM exchange through a back door. They are gearing up to commence drilling and exploration activities on these projects, which are located in Nevada, in Arizona, and in Mexico. So one of these key projects, the Burra Creek Lithium Project, is located here between 3 competitor projects of a similar scale. You can see this is the lithium-bearing clay beds that are actually sitting at very shallow 50-metre thick beds at surface. We've geared up designed a program to commence resource drilling on this, and we'll get going on that very quickly. If we look at our competitors, Bacanora, with their asset in Sonora, have got a market cap of 201 million. We've got the Australian company Global Geoscience with a market cap of 616 million on a very similar project to what this looks to be. So we're all permitted up, ready to go. We've conducted some initial metallurgical test work with some very encouraging results, and we expect to see those the drilling underway very shortly. In Mexico, this is a lithium brine exploration play. We've chosen an area with close proximity to a salt lake that has very, very high lithium in the salts and brines. Our initial test work on this area has been highly encouraging with very anomalous lithium grades throughout the near surface. We'll be conducting some geophysical surveys across this in the coming months to look at potential for a body at depth, and then Jim's team will be coming in and drill testing that as well later this year. In Nevada, we have a project called Wilson Salt Flat. We've already completed the geophysical surveying on this asset. It's located close to the Silver Peak operation. Silver Peak is the only operating lithium mine in the US. That's owned by Albemarle. That's one of the world's largest lithium companies. So you can see here with the geophysical surveys, we've got a very large conductive body, which is indicative of subsurface brine. Again, this is permitted up, ready for drill testing, and we'll get that work underway again in the coming months. If we look at a comparison of our lithium peers, I updated this as of November. There's not been really significant changes over that period of time, and I've split them into producers, feasibility stage projects, resource stage projects, and drilling stage and earlier ones. And you can see for the producers on a 100% basis, all of the companies listed on the Australian stock market and the Canadian market have a market capitalisation in excess of $1 billion. Those that are in the feasibility stage also have market caps of the sort of around 200 million up to $1 billion. Similarly, resource stage projects, 50 to 600 million. And you can see with those that are in the drilling stage, they can be anywhere from about 20 to 200 million. And I can be confident that these that are active with exploration programs and pushing out results is what's driving these, and we expect that Zenith will also have decent share price appreciation as these programs kick in this year. In terms of our gold asset, this is in a joint venture with Teck Cominco, their Turkish affiliate. Teck is one of the world's largest copper and zinc producers. We have a minority interest in this asset, which is at 30%. Teck has an exploration target of 3 million ounces for their gold projects, and they're pushing ahead with a resource drill out of this project because they believe that this project has that potential. So to date, we've had one drill program, and in particular, we're very excited about this north zone here called Cuzzy Zone. There's a drill traverse across that. If we look at a cross-section here, AA, we're getting excellent near surface and deeper drill results. Intersections like this, 16 metres at 4.7, which is totally open to the east, to the north and the south. We've been waiting some time now for forestry permits. We have one permit now granted. We're still waiting on 2 more, but Teck are confident we'll get drilling on this program, on this project in the next coming months, and we expect exciting news flow coming out of Turkey for Zenith. We have a broader portfolio of other assets, and with those we have a clear strategy of generating projects using smart, cost-effective exploration to advance those. and then use our corporate skills to monetize or deliver returns for shareholders on those as well. And I guess in summary, the news flow, which is all important for us at an exploration stage. We hope to be drilling in May in Turkey. We will have geophysical surveys going on next month in Mexico. We should be drilling and trenching shortly at Burrow Creek in Arizona on the lithium clay asset. We're waiting on results from our recently completed cobalt drilling. We're permitted up and should be starting drilling next month on the lithium in Western Australia. So good news flow, exposure to the right metals, and we think that potential for multiple returns on investment through Zenith Minerals. I guess we've got a little bit of time, so if there's any questions or anything. Can lithium be recycled is the question, and I guess yes, lithium can be recycled, but the new electric vehicles, the lifespan for these batteries are expected to be 8 to 10 years, so we're not really going to see a lot of that recycling kick in for another decade or so, but certainly probably from 10 years out we'll see lithium batteries being recycled and that lithium going back into new batteries.
Getting involved in the front end, how far do you go down to the pick and shovel? Do you actually look for partners once you've got a mine that you feel is worthy of it done, and then look for partners, or what? What do you do after that?
Yeah, we can certainly look at a straight monetisation at that point, or we can. Our sister company, Gascoyne Resources, is developing a gold project in Western Australia as we speak. That project is 90% complete. They've just started mining and should be pouring gold in a month or two. So I guess that demonstrates that, yes, we can go down the pathway of development. I personally probably won't be involved. It's not my area of interest. I find that the mining is more like working in a factory. You come in each day and go through the various processes to put it out. I'm much more interested in the exploration side and the R&D. But that's easy for me. I'll step off and someone else can take that forward. Really, we're in it for shareholders, and we'll do whatever's in the best interest of shareholders, be it develop an operation, sell it, joint venture it, or whatever.
You're going to take it as it comes, are you?
Yeah, really, it's a matter of take it as it comes at that point and make that decision.